The NACFB, the National Association of Commercial Finance Brokers, is all about standards. We're here to regulate an otherwise unregulated industry. We've been established for a long time. The association has been around looking after commercial finance, the bridging industry for many, many years, and we like to work with organisations and lenders that share the same ethics that we do. And those ethics are all about transparency, disclosure. The customers should know at the outset exactly what they're going to get at the end product.
Well, what we find is that compared with the time before the credit crunch, some clients will be asking about bridging finance, but very often it's a question of us actually recommending to the client that deals we might have done with a mainstream lender before the credit crunch can't be done in that way now, so we would recommend bridging finance. And then of course it's down to looking at which of the multitude of lenders in the market is going to offer the best deal for that particular client.
What I would personally look for from a bridging lender is how quick you'll make a decision, because that's key to coming to you, and then the cost of that exercise, so how much interest you will charge, arrangement fees, security fees, and then finally, if the client wanted to pay the money back to you, whether there's any charges or not. So those are my main criteria for bridging.
I know Fincorp since a long time, and we have done some business, especially in the residential property bridging finance. And I should say the service is very good. There is no any upfront or redemption penalty, so the cost is very much transparent, and it is quite attractive for the customer point of view.
Very simply and straightforward. We've been asked this question on the stand this morning. Quite often your traditional mortgage broker does exactly that, just mortgages. It's a difficult market to be in at the moment, and a lot of them post-January 2013 will need to be ready to fulfil the increased obligations and requirements by the FSA. Many won't be ready. They're looking for alternative ways of making or raising income. They're interested to hear that not only can they get an income from us, the 1% we pay to our introducers, but then have the potential to get their traditional income on a remortgage too.